Hi, everyone. I am Geraldine Anello. And after all the conversations we've had with music directors for 3 months during the pandemic, now that the situation is looking that it's going to last much, much longer than we all originally thought, we're going to shift the conversation from strictly music to be more about concrete steps to help musicians. So it's going to be about money. It's going to be about psychologically how we can help ourselves and emotional, like all the different kind of topics. So today, to kick off this whole series, we're going to have is a special guest who is also a professional musician and also a financial advisor with lots of money tips for us today. This is Scott Stratton from Finance for Musicians. I got it. Thank you for being with us, Scott.
Hi, Geraldine. Thanks so much for having me. Delighted to be here today. This is a time where people definitely have a lot of financial questions. It's a crisis for a lot of musicians.
Indeed. So just so we all know a little bit of Scott's background, it's quite an exciting background. So he's a professional trombonist. He actually has an undergrad from Oberlin Conservatory, and he has a master's, a doctorate, DMA, and a performance certificate from Eastman School of Music. He also is the principal trombonist, was at the Garland, Las Calinas, and Arlington Symphonies, and he performs frequently with his quintet, the Perennial Brass. Now, in the financial world, he holds the Certified Financial Planner as well as the Chartered Financial Analyst designations and a certificate in financial planning from Boston University, which is also my alma mater, actually.
Yay, love Boston.
Yes, indeed. So tell me, as a musician, how is this impacting you?
Well, all my gigs have been canceled since March, and really miss it. Really miss making music with my friend. Of course, missing out on all the income like every other musician. And there's still a lot of uncertainty as when we're going to be able to get back to work and to start concerts again. Back in May, we thought maybe things would start in the fall, and now in July, we're wondering when things are going to cancel and when things are going to reopen. So a lot of uncertainty, a lot of unknowns, still waiting to see how things play out.
Yeah, and I think for us in the theater world, Broadway just announced that they're going to not open until at least January of 2021. And so, and they're saying at least, they're not saying we're reopening in January 2021. They're saying not until then, possibly later. So I think the biggest thing when it comes to money is that people are looking at getting jobs, and people are looking at how to manage once the PUA ends, which as of the time of this interview is set to be the end of July. And how do you plan financially when you can't plan anything?
Yeah, this is a tough time. It certainly is a time that has brought an awareness to the importance of financial planning in advance of a crisis. The people who had an emergency fund, who had a bit of a cushion, who had been making retirement contributions, who were living well beneath their means, those people are struggling but surviving. But there are also a lot of Americans and a lot of musicians, not just musicians, but there are a lot of folks who were kind of living paycheck to paycheck. And when you get an emergency, things become desperate really fast. Now, the good news for the unemployment is that the PUA will run through the end of December on the basic level. The extra $600 a week from the CARES Act will go away at the end of July. However, for a lot of people, unemployment benefits, even at the federal level, will be at least 39 weeks and could be longer depending on your state level, if the state does higher than that. But for some people, they could be eligible for up to 39 weeks of unemployment benefits. But it's going to go down quite a bit for most people after July 31st when they take away the $600 a week. There are some proposals in Congress to continue that. Maybe it won't be 600, maybe it'll be 450, but as of today, the 600 is supposed to go away at the end of July.
So what are things that musicians can do right now between, we're like towards the beginning, mid-July, and the end of that extra amount? What are like the most important things that are like time-based? Everybody's
Right.
looking for jobs, but what are things outside of that can be very concretely done right now?
Well, one thing which just happened this last weekend is they have extended the Paycheck Protection Program, the PPP. So that had expired on June 30th, and this is a loan program. It's offered through the SBA, the Small Business Administration, but it's administered by banks. So you actually would apply for this loan through your bank. And it's based on 2.5 months of your payroll, which for someone who's self-employed, independent contractor, 1099, you basically go back to your 2019, calculate your average monthly earnings, you can take 2.5 months, and that is the amount of the loan you can apply for. Now, when you spend that loan on eligible purposes like paying yourself or paying rent for a business or a mortgage interest for a business, then the loan is forgivable. It means you don't have to repay it, and it's also not taxable income. So that has just been extended through August 8th. And so for folks...
I'm going to stop you right here because I have questions about that, because there's a lot of confusion everywhere about what that does and how it works. The name loan is really confusing to a lot of people. Do people have to pay it back or do they not?
Yeah, so it is a loan technically, and what you have to do is apply for loan forgiveness through your bank. And so the good news is that there's no payments for like 6 months. And so even if you do end up having to repay it, you have quite a bit of time and the interest rate's very fair. But the goal is to apply for forgiveness. And so what you have to do is carefully document that you spent the money in the allowable purposes. And if you've done that, then the loan will be forgiven. You do not have to repay it. You get to keep the money. And the goal of the PPP was to keep people off unemployment, to allow small businesses to keep the people on the payroll. Now, obviously, if you're a restaurant, you might have 20 employees, but this also applies to people who are just self-employed, who are just working for themselves, who are independent contractors, who are 1099s. If you're paid that way, you're still eligible for the PPP.
And I think that name is what confuses it, because I think a lot of musicians, when they hear this loan is for small businesses, they do not consider themselves a business because they're working for themselves. And so can you help us understand that a bit better? Are they a business even though they're not incorporated?
It's very simple. If on your last tax return you had a Schedule C, self-employment income, you are a business and you are eligible.
Mm-hmm. And so if somebody, which is a case of a lot of musicians, they're getting some 1099s and they're getting some W-2s. So does it still apply for them?
Yes, it will apply for all of your self-employment earnings.
Okay, so you're looking at all your 1099s from last year. You're taking 2.5 months of that. Now, what if you had 1099s for halfway through the year and then not at all for the next 6 months? Do you still combine it all for the year and do the average?
They can, yeah, there is some room for flexibility for seasonal adjustments. So if you're missing out more because some of your work is seasonal, is not even through the year, you don't have to take the average monthly earnings. So there is a form for this, and they have a kind of generic application, and all the banks have to follow essentially that generic application. And so the key is before you go into the bank, you want to have already filled that out, spend some time with your tax return, with your accountant, with your financial planner, and to make sure that you're filling it out correctly. Because I have heard of some musicians who have filled it out incorrectly. They didn't take out their expenses, for example, and then they got a larger PPP loan than they intended. Now, if that happens, it's not a disaster. What will end up happening is your forgiveness amount will be slightly smaller, and you'll probably want to repay the rest of it, which you can do without interest as long as you're paying it back later this year.
So you have to give not only the average of your 1099s, but also deduct your Schedule C from it?
So it's supposed to be your net earnings from the Schedule C. So on your Schedule C, you start off with your gross earnings from your 1099s, but then you're going to subtract out your business expenses.
I see. And that's the number you're going to give them, and from which you're going to get your average. So it gets a little bit detailed. It's not quite as a direct path. So then what happens if they give it to you? How long do you have to wait before you receive it? And what does it do to your unemployment?
Right. So some of it will take, it'll depend on how long it takes the bank to process. Originally, it was about a month, but I think they're speeding that up right now. And so it could be just a matter of a week or 2 weeks, depending on your bank, to get the SBA approval for it. After that, originally it was supposed to be an 8-week period that you had to spend all of that money within 8 weeks. However, currently, if you're just applying now, that will be extended to 24 weeks, and you'd have potentially 24 weeks to spend that money and use it. Where you want to be careful is if you have unemployment benefits, that you are reporting this correctly so unemployment doesn't come after you, because technically the PPP is designed to keep people off of unemployment. So if you haven't applied for unemployment, definitely go look at the PPP, and then you could apply for unemployment after you finish the PPP, in which case you might actually want to try to wrap it up in 8 weeks and not spread it out over 24 weeks.
And now when you pay yourself, is it a monthly income or is it a weekly income? Like you can pay yourself once and then get unemployment for other weeks. How does that work out in time?
I think you would want to spread it out over the 8-week period, because there is a monthly maximum amount that you could pay. You're probably going to be under that monthly maximum anyways. But it doesn't have to be.
Is that for the PPP or is that for the unemployment? Where is
that's
that?
That's for the PPP.
Mm-hmm.
Yeah. But then I think you would be eligible for unemployment later. And if you're already on unemployment, I think you can just talk to them and say, hey, I'm getting this loan from the PPP. And they would count that as income, and it might delay your benefits. You might not get benefits for a certain number of weeks, but I assume it would probably still be under the same claim. And so then after 8 weeks or some other period of time, you'd be able to resume collecting those unemployment benefits.
So what's the best strategy?
The best strategy, I think, is to try to time this towards the end of the month, so you get the extra $600 a week through July 31st. And then when it was going to be cut down in August, to start your PPP period then, so that you apply for the loan in July, but don't actually take receipt of the loan until August. That would be the ideal timing if you can get that to work out.
Wow. So we had done an interview at the very beginning of confinement with a financial coach named Kelsa Dickey, and she had mentioned that depending on where the application was sent for PPP, because it's per bank, they would go through or wouldn't. So some people reported they would apply through Chase and it would be denied, and then they would apply through PayPal and that would get accepted. Is that still the case, that depending on the application, you can get more or less chances?
Yeah, when the PPP originally came out, they didn't have enough funds. They had $349 billion and they ran out. And they also wanted to make sure that it didn't just go to the big Wall Street banks, that it also went to smaller banks and was distributed, more fairly, which ironically means that a lot of people who were customers of the national banks that were a little slower to process these ended up missing out on the window to collect the money. The good news is that there are actually ample funds available today. There's still $130 billion available in this program. And as of today, it shouldn't matter where you apply in terms of eligibility, because it does appear that there is enough in funds. Now, it could be that they run out of funds before the August 8th deadline, so you might want to be careful if you're trying to delay it intentionally. I would probably get started on it earlier if you can.
So once you get the PPP, do you have to use the money right away, or can you wait until you pay yourself with the money that they gave you?
Yeah, so once you receive the money, that's going to start the window of the 24-week period for eligible expenses. Mm-hmm. And so you do have the full 24 weeks to use that money in the qualified manner. But if you're trying to get back on unemployment or something else, you might want to try to speed that up and use it within the original 8 weeks plan.
So a lot of people at this point are really familiar with the EIDL, but can you please, just in case for those musicians who have not used it yet, what is it and how do you go about it?
Sure. The EIDL is another program from the SBA, which had existed previously. This is the Economic Injury Disaster Loan. And you apply for this directly through the SBA website, which is just sba.gov. And when they originally started this program, they said it was going to be a $10,000 advance, which it is, but it's a $10,000 advance if you have 10 or more employees. And they cap it at a $1,000 advance per employee. Now, this is also a loan program, and they determine the amount of the loan based on your receipts and your credit score. So they will look at your earnings from last year and eventually offer you a loan. But what they will do fairly quickly is give you a $1,000 advance on the loan. And that $1,000 advance does not have to be repaid. It is not taxable income, and it is yours to keep even if they reject your loan application or you decide not to accept the money.
Yeah, so a lot of musicians have reported getting somewhere between $4,000 and $10,000 as part of applying simply to the EIDL. And then some of them said once they refused that, they did not get the $1,000. Should they apply again? What did something go amiss? Can they come back around it?
Yeah, it should be a matter of timing. They should get the advance first. And when you do the application, you have to check the box that you want the advance. If you don't check that box during the application process, then you don't get the $1,000 advance, and then you're missing out and you just get a loan.
Mm-hmm. So can people apply again if that's the case, if they forgot?
I'm not sure if you can apply again. That's a great question. I'd have to check into that, I'm afraid.
Okay. And then the loan might be forgivable or might not be forgivable depending on down the line what happens.
Unfortunately, the EIDL is not a forgivable loan. You will have to repay it. There is a deferral on this. What you really want is just the advance.
Mm-hmm. So then, would that loan be good? Like, who should take that loan? The actual so not the $1,000 that is forgivable. Who should really say yes to if they get a larger amount of money offered as an actual loan that they have to repay down the line?
If you're looking at having other loans that you would have to take out to keep your business afloat, if you needed just to be borrowing money, if you're looking at putting that money on a credit card, you'd be a lot better off taking the loan now from the SBA at a low interest rate, having several years to pay it back, than putting a ton of money on a credit card at 25 or 30% interest.
Mm-hmm. So in that case, because the interest rate is lower.
Yes.
It is better.
And one of the other things you can look at, though, is if you did take an EIDL, you thought you were going to get a large advance and ended up just being a loan, you can refinance the EIDL through the PPP.
How does that work?
It is possible to coordinate the two, and the advance is going to be subtracted from the forgivable portion of the PPP. So let's say you get an EIDL loan, you take out $5,000 loan, and 1,000 of that was an advance. The 1,000 advance you keep. The rest of the loan you can refinance with a PPP, and that can give you some benefits as well.
Okay, so let's look at a musician today who is getting unemployment, who is getting the extra $600 that ends in a couple weeks. Where should their priorities in time go? Should they first apply to jobs ASAP? Should they first do the EIDL if they haven't? Should they do the PPP? Like, what's the order of priorities?
Yeah, certainly. I hope they would be looking at getting a job and trying to do something enjoyable and productive and get off of that and on with the rest of their career, rather than waiting for their own sanity and personal benefits. In a lot of cases, the amount people are getting from unemployment today with these $600 is as much or more than they were earning before. So it's not been a real big incentive for people to go and take some part-time job and lose the unemployment benefits. There may be some benefit to them working part-time, even if they just find something part-time, that they might still be eligible for some unemployment benefits afterwards.
Interesting.
But they do.
How would that work? They're getting a job purposefully for how long does it take before someone can qualify for unemployment?
That depends on the state level. Yeah, it depends on when you'd be eligible for unemployment, that they have their own application process. But I would be looking at the PPP, investigating that. If you've been self-employed, if you're self-employed in 2019, have that earnings history, and you're just doing unemployment as someone who is self-employed.
Great. So first EIDL, then PPP, and jobs, because then that will help increase the amount of unemployment in time, correct?
Right. Now, if you're doing the EIDL and the PPP, the $1,000 advance you get from the EIDL will be subtracted from the amount that's forgivable on the PPP loan. So then you might as well just have done the PPP. I would only do but if you've done the EIDL, you can still do the PPP and potentially get more. Mm-hmm. So if your forgivable amount is a lot more than the $1,000 that you're getting as the advance, then you would have been better off doing it through the PPP.
So if you've already gotten the EIDL, still try the PPP. If you have done neither, go straight for the PPP.
Exactly, that's correct.
Great. and then go look for jobs. So that's very helpful. Now, what are, questions people have had are for the EIDL and all of those forgivable loans, are they taxed or are they not taxed? Should they put money aside or not?
So the forgivable portion of the loan will be forgiven. However, you're paying yourself payroll. So the payroll will still be taxable.
So both for EIDL and PPP?
The EIDL won't be forgivable except for the advance. The advance is non-taxable. For the PPP,
is that for sure? Is that for sure? The advance, the $1,000 from EIDL is non-taxable?
That's my understanding.
Okay, great. That's really helpful because I know there's been a lot of back and forth on this across all forums.
Yes, I looked into this and I've got it coded in my QuickBooks properly as a non-taxable loan. That's my understanding as of today.
Great. Yeah, things have been changing a lot.
Yeah. And for the PPP, the portion that you're using for payroll, that's going to be ordinary income to you. And so that part will be taxable, but the loan's forgiven. Okay,
great. Now let's look at other ways people may be looking at handling this time. Say for people who have had money set aside for retirement, that people who really did not have any kind of other savings in savings account or anything, or maybe who already, used it entirely. Should people start taking money out of those retirement accounts? Should people stop paying their credit card or their, student debt repayment? Like, what are some things people can do in shifting the way they normally handle money?
Right. So first, on the retirement account side, hopefully you're not going to have to take money out of retirement accounts, because what I've seen as a financial advisor is people who are taking money out of their retirement accounts, loans, distributions, they don't end up having a lot of money in those retirement accounts when they are 65 and ready to retire. So if you have to raid those accounts, you have to do it. And it's going to be a little bit easier today using COVID-related distributions. So as part of the CARES Act, they have kind of loosened the rules, allowing people to get some access to those monies, potentially even spread that money over the income over the next 3 years. So you don't have to pay a big income tax bill today. The other thing to consider is if you have a Roth IRA, you can always take out your principal without taxes or penalty at any age. It would only be if you get into the earnings portion that you'd have to take out, that you have to pay any taxes or penalty on the distribution.
So is that a good idea in case of true emergency, or is that still really just last resort, avoid it at all costs?
It is better than putting money on a credit card. That's basically where it is.
It is?
Probably. I mean, I don't expect that you're going to get a 30% annual return on your investments over the next couple of years, but you'll definitely be paying that if you put the money on the credit card to pay your living expenses.
So a lot of the advice out there has been about opening more credit cards if possible, trying to have as much liquid amount available, even if it's not what people would normally do, is to have like multiple credit cards.
You don't want to have too much credit, but you certainly want to have enough. So I would say definitely have a couple of credit cards open. Look at also extending the limits if possible, especially if you're at high utilization. You want to be at a fairly low utilization. And you probably only want to be using 20-30% of your monthly credit limit each month. And not, if you're using 90% of it, then I would definitely look at trying to open up more credit.
So it is better to have multiple credit cards and use 20 or 30% credit on each of them rather than have only one used up all the way.
Exactly, yeah.
Interesting.
And then a couple of other ideas. If you're self-employed and you have your health insurance through the marketplace, through Obamacare, through the Affordable Care Act, you're probably receiving a premium tax credit. And that's an adjustment where the taxes are paying part of your insurance premiums. You can adjust that in mid-year if your income has gone down. And so if you've lost a lot of income in 2020 compared to where you were this time in 2019, rather than basing it on your 2019 taxes, you can go in and proactively adjust it to get a larger premium tax credit if you need some help with those health insurance premiums. That will lower your health insurance premiums even lower.
So I think, like you said, a lot of people with unemployment are getting about the same amount of money or maybe even more money than they do when they're working. Now that the extra $600 is about to end, how long should they wait before they can go to the healthcare and get that tax rate you mentioned?
Well, they can do that now if they want to project forward their earnings for the rest of the year. So if they think that unemployment might be dropping to, $500 a week, they can calculate what they expect their annual earnings will be for all of 2020.
And is that something, if you're not proactive about it and you don't do it, is that something that will adjust itself on its own at tax time next year, or is it just gone forever because you didn't do anything about it?
Yeah, you will get the adjustment later on. It's just if you want some help now, you don't have to wait until next April 15th when you do your tax return to get that extra premium tax credit.
And talking about tax returns, so those are due in a week.
Yes.
And so is there anything people can do if they can't pay the amount they owe?
Well, they can, of course, they can always file an extension if they need to do that. There'll be some earnings interest for that. And they can also look at trying to do a payment plan with the IRS, let them file your return now and ask to do a payment plan and to look for a hardship exception for any penalties.
Mm-hmm. And so the hardship exception means there's no penalty. And how long would that last?
I'd have to double check to see what type of terms they have on the payment plan. Thankfully, I try to keep my clients out of that. You really need to be doing quarterly estimated payments, people. If you're self-employed, you got to do those quarterly estimated, or you're hitting some penalties and taxes and are going to be in trouble. So
I don't think that that's something that most people know. I think the idea is that quarterly is there to help people manage their money, but I don't think anyone knows that the quarterly actually, if I'm understanding it correctly, actually lowers the amount you owe if you add it all up at the end of the year. Is that correct?
Well, you are paying your taxes in advance. So when you're 1099, nobody withholds any taxes for you. You're just getting the full amount, and at the end of the year, you're stuck with that. If you haven't met a certain threshold of, it could be 90 to 100%, depending on your income level, of taxes paid during the year, you're going to have to pay all those taxes plus an underpayment penalty. And so it is beneficial to do the quarterly estimated payments because it will keep you from hopefully owing a penalty for underpayment the next year.
So would you give us any idea, because I think it's hard, at least for me, I don't know, maybe not for anyone else, but to conceptualize like what kind of money we're looking at. Like, would I end up, if I'm not paying quarterly, paying like $10 more at the end of the year? Or are we looking at hundreds of dollars here?
It'll probably be hundreds. If you owe $10,000 in taxes, yeah, it would be hundreds in penalties.
Wow. I mean, if you owe $10,000 from your 1099s, you're doing pretty well, right?
Yeah, well, also there's self-employment taxes because, you've got 15% in, that's just going towards Social Security taxes as someone who's self-employed anyways.
So what are some things, shifting now from the government to more of what we can do on an individual level, what are some things you're personally, and maybe the musicians in your community, that you're seeing people doing to handle this time right now on a financial level?
Well, certainly using some of this unemployment money to build up your emergency fund is important. Now, the old rule of thumb was have 3 to 6 months living expenses. And this time things look really tough and people are realizing, boy, I really need 6 to 12 months and not 3 to 6 months, because 3 months, things might still be rough 3 months from now.
So how do people do that when they're on unemployment? Like, what is the amount you're recommending they put aside to start building their savings?
Well, it's largely whatever they can afford now. Some of the good news is there's also no place to go out and spend your money right now other than ordering stuff online. So hopefully your expenses can be a little bit lower as well.
I think a lot of people, when they're starting building their savings, put it in their checking. They're just like, okay, I'll just put this amount aside. But can you explain why opening a separate savings account is actually more beneficial than keeping it along the checking?
I think it is good to have buckets. I think for most people, we kind of do this mental accounting game where we have one bucket for one purpose and another bucket for another purpose. And if we leave everything in checking, it feels like it's there to be spent. If we put it in another account where it's maybe a little bit less accessible, or it's at another bank, or it's at an online institution, we know that's our emergency fund that's not there for discretionary spending, that's not there for vacation money, that's not there for a new car. It's there for whatever other purpose, retirement, for emergency savings. And having that mental dividing line, retirement account, college fund, new car account, vacation account, all of these can really help people do more savings because they now have more goals. And then they're saying, well, if I need to go on a vacation next year and I want to spend $3,000 on that, I need to put in $250 a month. So it kind of ups their savings game by having those separate goals.
I think the vacation for musicians in a year will be doing music nonstop. they'll feel like that's the vacation, is actually doing the job. Will feel like
yes,
where the real joy is. But can we talk also about the fact that savings account have interest? They gain interest over time, which is quite helpful, isn't it?
Yeah, in most of your checking accounts, you're not getting any interest today. You know, you go online, you can still get 1% or so available today, which will definitely help. And those will go back up at some point in the future too. So you want to have it be in an interest-bearing account where you're going to make some money.
Yeah. And do you anticipate that rate going further down, or do you think it's kind of stuck at 1% and will stay there?
Interest rates appear to be going to be staying here for a little bit while at these very low rates. The Federal Reserve isn't going to raise interest rates until we start to have some inflation. They've made that pretty clear. And there's no inflation on the horizon right now. We're struggling to stave off deflation at this point, but maybe in a couple of years.
So what's the best way people can start saving while they're on unemployment? I mean, I think those two concepts are so foreign. I think, you know, being in unemployment is always this idea of like, that means I don't have money, so I can't save money because I'm already on unemployment. So how do you reconcile those two concepts?
Behaviorally, it's difficult. If we wait until we feel comfortable, it never happens. So we have to put it on autopilot. We have to just make automatic contributions. This is how people are successful, is by just setting up automatic contributions. You can start really low. Set up your emergency fund and just have it put in $50 a week, $50 a month. And then if that works for you, can you bump that to 75? Can you bump that to 100? Do the same thing with a retirement account. Can you start a Roth IRA? Yes, put in $100 a month into a Roth IRA. Then in 6 months, if you didn't miss that 100, can you bump it to 150? Same thing for all of your savings goals. If you have kids and want to set up a college fund, you don't have to start with $1 million in their college fund. Can you start off with $50 a month? Just get started, get the ball rolling, increase the amounts over time, make it just like paying any other bill, just like that cell phone bill automatically gets deducted from your account. You know that on the 15th, you're going to pay a $100 bill. Have that be a bill that you're paying yourself by having it go into another account where you're not going to touch it. Mm-hmm.
And what are other ideas or anything else that people can do to help themselves? And again, looking at the end of PUA, that's a pretty massive change right there. I mean, that $600 a week is where the difference is at for most people, from being able to live on that, and now looking at really difficult times ahead. And I know personally, I have lots of friends who are applying to jobs time and time again and are just not finding them because they've been musicians their whole lives, and lots of people are looking for jobs. So what are things looking ahead they can do very concretely to handle possible months of this ahead?
Yeah, if you have student loans, you might want to look at the income-based repayment programs. For any federal subsidized student loans that you have, there's the standard repayment program, which is over 10 years. And then there's an income-based repayment program, which will adjust the amount of your student loan monthly payments based on your current earnings. And so if your earnings have dropped a lot, it might be worth taking a look at those income-based repayment plans if you need some relief from your student loans.
That would make probably a big difference, because do you happen to know the average of what Americans pay for student loan repayments? I mean, it's pretty massive, it seems to me, right?
It is, especially for the younger generation today. I mean, a lot of people are, I mean, average is probably like $40,000 loans, but half of the people have zero and the other half have 80. Mm-hmm. So even the $40,000 average really doesn't explain the situation for people who have student loans. I talked with someone yesterday who he's got $90,000 in loans and his wife has $55,000 in loans.
And so the program you mentioned, would that make that they don't have to repay for a period of time? Would it actually forgive some of the amount? What does it do concretely?
So the income-based repayment will lower your monthly payment based on what the student aid believes you can afford each month. Unfortunately, it doesn't change the amount of interest that accrues in the account. So it's best to only look at this as a temporary thing. So if later on your income picks back up, your income-based repayment will increase. So it can help you a little bit today, but it can be a problem because I've seen some people where their income-based repayment is 0 because they have 4 kids. And so the government says, oh, you don't have to repay anything. Sounds great, except you're still increasing your loans then by 6% a year.
Mm-hmm.
So you want to be very careful about this as a long-term plan. However, there are some opportunities for forgiveness under the income-based repayment plan. And there's 2 ways that can happen. The first is the Public Service Loan Forgiveness Program, the PSLF. And if you work for a public service, which could be the state government, it could be a school district, or for any nonprofit. For example, if you work for a symphony orchestra, a chamber music league, a musical theater, an opera company. If you work for a 501c3 company, you are in public service. And if you work full-time and you're on income-based repayment plan, you make 120 on-time payments, 10 years of payments, any remaining balance would be forgiven at the 10-year mark.
So if we're looking at the order of priorities between all these different things, first of all, my first question is, if you have student loans, should you save money at all, or should you just deal with the student loan repayment and then do the savings once that's over?
I would prioritize the savings and not send in any extra student loans. If you're looking at, hey, should I send in extra to my student loans? Definitely don't do that. Just do the minimum payments for now.
Mm-hmm. And so then for the rest, what do? You open your credit card, then you talk to your healthcare. By the way, talking about healthcare, can people switch from platinum to qualify for bronze? I think it is like the lowest level that you have to earn less than in order to qualify for that one. Is that something people can look into again?
I'm not sure if you can do that outside of the open enrollment period unless you have a qualifying event.
Okay. And those would not be like the unemployment $600, that would not be a qualifying event?
No, if you're still self-employed, I don't think you had a qualifying event unless you got, divorced or something.
Mm-hmm.
You probably didn't have a qualifying event if you were on an exchange plan already since January 1st. You probably did not have a qualifying event that would allow you to change until the next open enrollment period.
Great. So the priority then, yes. Did I nail it? How would you say it?
Yeah, I'd say you want to reevaluate if you want to do the premium tax credit. That's the only thing I would really look at as far as changing your plan, that could be worthwhile. Again, it's going to be the same no matter what. It's just whether or not you want to get that money now in April. So these are just all different ways that can help. With the credit card, you open it up and you can get some additional credit lines, but I wouldn't worry, don't obviously carry a balance just for the sake of doing that.
Mm-hmm. Great. Well, these are all very helpful. Is there anything else that we can do to help ourselves, or did we cover all the basics?
I think people feel more confident, more secure, and more comfortable when they have a financial plan. And obviously that comes to light in these days where there's a crisis, but it can also mean that you're going to be more prepared the next time these types of things come around, because we'll be talking about having an emergency fund, putting automatic contributions into a Roth IRA, understanding your health insurance options. So there's never a bad time to make sure that you're really on top of things financially. And people who are self-employed are entrepreneurs. Most musicians don't think of themselves as being a business owner, but you are. And people who are in business need to surround themselves with experts because you can't know everything. Mm-hmm. And so it's helpful to have a good accountant. It's helpful to have a good insurance agent. It's good to work with a financial planner who can help you with these types of questions. And that way you can make sure you're getting custom answers that's specific for your situation and not just a generic answer off of Google. Yes,
indeed. Particularly with finances, Google is just not that. It's like health, just not that helpful. You could.
Right.
So for everyone, if you're interested in Scott's services, his name is Scott Stratton, and he is from Finances for Musicians. And you can find his services at financeformusicians.com, correct?
That's it.
Financeformusicians.com. Scott Stratton, who is also an amazing trombonist, if you're looking for a trombonist. Thank you so much for taking the time, Scott. I really appreciate it.
Thanks for having me. It's been a pleasure.
Bye.
Bye-bye.